Yo, what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and without further ado, let's jump right into Bitcoin. So, I actually made a very interesting observation on Bitcoin's historic price action, okay? Primarily on the bear market drawdowns. So, I want to be going over this observation with you guys, as well as what are my thoughts on the macro view. At what point, under what circumstances, under what conditions am I going to be looking for this bear market to switch into a bull market? So with that, let's jump right into this beautiful historic chart of Bitcoin. Now, the observation that I made on this chart is this. Every prevailing bear market drawdown has been less than the previous bear market drawdown. Okay. Now, to give you a visual on that, I've actually drawn it out for you guys. So let's go ahead and bring out all the historic bear market drawdowns that Bitcoin has had. Okay, and this is it. So now our first bear market drawdown was here back in the bear market of 2011, where Bitcoin actually drew down a good 93% from its highs. That must have freaking hurt. Okay, but 93%. What was good about that's not good about this time over here is, well, the fact that that played out over, what was this? 161 days, whereas our current bear market is playing out over 385 days and going on. Okay, so that was a very quick, very volatile bear market that Bitcoin had, but that was the drawdown, 93%. All right, 2011. Now, the next bear market drawdown after 2011 came in on 2014. Okay, that bear market drawdown was a good 86%. All right, down from the previous drawdown of 93%. Okay, now the bear market that came after 2014, 2015 was this one right here, which came in 2018. What was that drawdown like? That bear market drawdown was 84%, down from 86%. Okay, now what about this current bear market drawdown that we're in? So far, because of course we don't have a turn just yet. So far, the drawdown is sitting at 77%. Alrighty, so now I'm sure you guys are seeing a bit of that trend here, right? So we're seeing these drawdowns actually decrease in every bear market ever so slightly. But consequentially, what's also happened throughout this entire throughout the cycles of Bitcoin is that even the bull market markups have decreased over time. To give you guys an idea of that, well, let's go back to the bear market of 2011, okay? Go from the lows all the way to the highs that came in at around $1,255. That was a good 62,917% to the upside. That was the markup, guys. 62,000%. Okay, how about from the bear market of 2015 all the way up to the highs of the bull market of 2018? That was a good 12,330%. Okay, once again, we see a massive reduction even in the markup phases. Now, how about from the bear market of 2018 going all the way up to the bull market of, well, 2022, our most recent bull market? What was that markup like? That markup was a good 2,071%. Once again, down drastically from the bull market of 2017. Right, so we're seeing these cycles compress over time. So I wanted to drive this point in primarily because it's about really understanding these trends. Okay, when does a trend really begin? When should you be preparing for the bull market run-up? Now, this was the last bull market high at 20K. When price broke 20K, everyone was like, all right, bull market's on, bull market's on. But guys, anyone who decided to get into their positions, their Bitcoin long positions after the break of 20,000, only reaped this much in benefit, right? Which was a good 250% to the upside. However, what about all of this? What about all of the moves that happened from 3K going up to $20,000? That was 511% that was completely missed out on. How about the previous bull market? Anyone who decided that, hey, the bull market only begins when we take out the highs here at $1,256, how much did they miss out on? They missed out from this entire move spanning from $167 going all the way up to those highs at $1,257, which was a good 650% they missed out. Okay, what about the one prior to that? Well, let's say that, hey, I think Bitcoin's only in a bull market once we get over $32 per Bitcoin. How much did they miss out on? Well, let's see that. They missed out on a good 1,465% to the upside. This is to say, guys, is that the trend begins, any cycle begins when the trend begins. The next bull market cycle begins when the trend begins. So now, when did the trend begin in this cycle of the market? The trend began right here, as soon as Bitcoin started putting in higher highs and higher lows. Okay, when did the trend begin in this phase of the market? Once again, the trend began right here, higher highs, higher lows. When did the trend begin in this phase of the market? Once again, right here, higher highs, higher lows. That's when the trend begins. They say make the trend your friend until the trend ends, okay? Now that trend is going to become your friend as soon as it starts showing itself in this phase of the market. We're not going to be looking for the highs to be taken out, because in that time you've lost out on this entire range. Now from where price is sitting at right now, okay, contingent on price turning right here, what price is sitting at right now to the highs, that's a good 254% that you're going to miss out on if you miss the turn in the trend. Okay, so this is a lesson that I learned from the previous cycle, which is the trend begins when the trend begins. When the trend begins, the cycle begins. So now that begs the question, right? So when can we expect this trend to begin? What are the parameters that I'm going to be looking for to be like, okay, you know what? We're heading into the next cycle. We're heading into the next bull market markup phase. So for that, let's get into one of my other Bitcoin charts where I have all my TA drawn out for you. So this is, I primarily use this one on Bitstamp. This is the weekly time frame. Now the parameter that I'm going to be looking for in order to really anticipate the next turn in the market is going to be found on the weekly time frame. Okay, I'm going to be looking at two variables here. Okay, specifically, I'm going to be pulling up my Mango dynamic template. All right, so now I have the Mango dynamic indicator on my page. I'm also going to go ahead and turn on one of my simple moving averages here. Okay, now the simple moving average that I specifically am going to be looking at here is going to be the 55 simple moving average. I'm going to change the color to a green because I usually like my 55s to be a green color. Okay, as far as the Mango dynamic indicator is concerned, for those of you who actually have access to it, you guys know that we have three different calculations for the dynamic. Now, depending on what kind of trader you are and what time frame that you're playing on, I'm going to go on, switch on over to my input so you can see calculation right here. Toggle on the drop-down menu, you'll see dynamic, volatility, calculated dynamic, and the Ichimoku. We're going to click on Ichimoku. Now, I primarily like using the Ichimoku dynamic, especially in terms of the entire macro cycle. Okay, so I'm going to be using specifically this template of the dynamic indicator in addition to that 55 simple moving average. Now, what I personally am going to be looking for over here is for price to start living over that Mango dynamic resistance overhead, which currently is sitting at $24,866. It looks pretty far, eh? It looks pretty far. But guys, let me tell you something, okay? If I just go ahead, smack a line right here, okay, which was the 18.7K lows. Now, Bitcoin was actually hovering over 18.7K until the FTX debacle took place, which then took us down to the 15K lows, right? 15.9K lows. Please note that $24,000 is just simply that resistance point from our previous price range. Okay, so just right here, people were still not feeling too optimistic, right? We were still very much stuck in this range from 18.7K going all the way up to $24,000. That was the prevailing range. As soon as price starts ripping up to live over that Mango dynamic indicator, in addition to the 55 simple moving average, I am saying that the next bull market cycle likely begins right there. Okay, I believe that the Mango dynamic indicator is going to be your first signal. Price penetrating that and closing over the dynamic right there is going to be your first signal that, hey, get ready, the bull market is about to begin. You need to start preparing for a change in trend. Okay, that's when you can start flipping your biases on the chart. Because in a bear market, you're best to be bearish. In a bull market, as soon as the trend starts flipping, you need to start checking your bearish biases and you need to start having a plan in place for this next turn in the overarching trend. For those of you who have access to the dynamic indicator, switch onto your Ichimoku template because I'll be looking at that specifically. Okay, for those of you who do not have access to the Mango dynamic indicator, if you want access, check out the link in the description below. You'll find more information on the indicator. However, I will also be pulling up the dynamic indicator in my future videos, so I will be keeping you updated on where this dynamic moves down to. Okay, so that way you are always updated on the numbers on the indicator. Okay, but for now, it's coming in at $24,866. This is going to be the macro criteria that I'll be looking for price to live over before I start getting bullish on the overarching trend. Now, just to give you guys some insight on how this has performed in the past, we can actually go back to, some of our prior sort of bear markets and see how this has performed, right? Now, this is the dynamic indicator in relation to price action as well as the 55 simple moving average smacked on my chart. You'll notice that every time price has penetrated both levels, that has marked a turn in the overarching trend. Now, this, we have information spanning all the way back to the 2015 bear market on the Bitstamp exchange. As you can see, I'm using Bitstamp on the weekly time frame. But yeah, as soon as you took a trade on that, say even if you caught a trade off of that Mango dynamic support and got out, say even on the retest of the Mango dynamic resistance as soon as the bull market actually ended, that's still a good 2,859%. Okay, how about on the next bull market, which was right here? Right? Now, we first took out the Mango dynamic, used it as support, and only then did we take out the 55 simple moving average. However, it did not give you a clear retest of the 55 SMA. Okay, it was one swift pump to the upside, and then getting in on that candle can get very, very tricky. Right? So that's why I have two sort of key levels on my chart at all times. That way I always have a leading indicator. And in this instance, the dynamic was the leading indicator. We took it out, used it as support, and then pumped only to take out the 55 simple moving average very, very swiftly on the next candle. Now notice how price also held it as support. Now this was the COVID dump. This was the COVID crash. Right, so we had a little of a black swan event, but notice even on the way up, you could trust it once again. Took out the dynamic, that was your tell, and that, okay, this trend is flipping. Took out the 55, the trend is flipped. You need to start getting ready. You need to start preparing for the other side of the trade if you were bearish in this area right here. So this was a very, very tricky region for a lot of traders out there. Taking the other side of the trade was not easy considering everything was bearish. Everything out there was looking grim. However, if you followed the TA on this, you were on the safe side of the trade. At the very least, you had a plan getting into the next markup phase. Okay, now once again, we're going to be looking for something similar. Notice how you could rely on these two indicators even on the breakdown. Right, so once again, we're going to be relying on the dynamic and on the 55 simple moving average for our next markup phase. When is it time to start getting ready for the next bull market cycle? So now these are my macro views on the chart. I also just put up a poll on the main community tab on the YouTube channel. It says, what do you think? Is the Bitcoin bottom in? Yes or no? I want to hear your thoughts on whether or not the Bitcoin bottom is in, because only then can we really start looking for that signature to play out to the upside, wherein price will start heading up to that dynamic, to that 55 to start a fresh new cycle. Right, now, in addition to this, I also want to go over some lower time frame TA for all you traders out there. I'm first going to start off with the Mango dashboard. I'm currently on the 4-hour time frame. Actually, you know what? Let's start off with the 12-hour. Okay, Bitcoin USDT is short on the 12-hour. Okay, however, this reversal actually only came in 6.5 days ago. I don't know why I said only. It's not an only. 6.5 days ago. I mean, that's a week, right? And notice how there's barely any follow through on here. I mean, you're up. If you took a trade on that, you're up by a good 3%. For those of you like scalping, so 3% is half decent, right? However, volatility is dried out, man. Volatility is sitting at 5. However, let me tell you what I'm going to be looking for to anticipate the next sort of turn for Bitcoin. Now, for that, I'm actually going to start with my lower time frames. It's primarily the 1 hour. I know that you're probably like, Krisha, 1 hour, seriously. But no, let me show you something because I can see like a cascading sort of play that could play out right here. I also want to give major props to Philippe from the Mango Seed program, who actually caught this beautiful head and shoulders pattern. The volume profile does work out for this, so just a heads up, okay? So this is the head and shoulders pattern that we're looking at right now. It is a bullish inverted head and shoulders pattern. What makes this one very interesting is the neckline, actually, because we have an ascending neckline. That is actually a show of growing strength on the chart. And when these patterns break out, they usually break out in a very, very volatile fashion, okay? volatility picks up, and when these things break out, it's more like a Bart-like move to the upside, and we're seeing Bart-like moves like we saw right here, right? So anyways, what I really like about this is likely going to lead to a cascading sort of effect, because the measured move to this pattern, okay, if it plays out, please note that this pattern has not triggered just yet. Okay, if it plays out, we're looking at 17,660 as the measured move. I can go ahead and smack a line right there, okay? Let's make that a yellow line. That way we can differentiate between our proper zones and our measured moves. Okay, so measured moves is going to be in yellow. 17,657 is going to be the key region. I think we can start looking for this shoulder to play out and actually start testing the neckline if we see this pattern play out. Please note how the right hand side shoulder also has a channel. If this channel starts breaking out, guys, we can expect a test of the neckline. Okay, a break of the neckline, in my opinion, I think is going to be volatile, so heads up on that. Why this is going to be pretty cool is that a break of this would then lead to Bitcoin threatening to break out of a daily pattern as well. Now on the daily time frame, we have a cup and handle like formation right here. Okay, now notice how we have a bunch of cascading effects, okay? Now, if I go ahead and mark out the neckline of the cup and handle-like formation, we have the neckline coming in at 17.8K, so we have quite a bit of resistance overhead. Okay, so this is it right here. That is going to be the zone of resistance. Let's see if it matches up with the dynamic indicator. Okay, no, the dynamic indicator is actually sitting way below that, so this is going to be a very, very good picture. But anyhow, that is going to be the resistance. If we break out of the cup and handle-like formation, okay, note how, please, the break of any pattern is contingent on us closing candles over the neckline. Okay, I usually look for consecutive closes, guys. Okay, now the measured move of the cup and handle comes in at around 20.7K. Now check this out for confluence. If I take you guys on over to the weekly time frame, I'm sure you guys are likely already seeing the pattern on here, which is this. We have a falling channel on here, okay? So a break of the cup and handle is going to threaten breaking out of the falling channel pattern. Now, the falling channel, guys, on a technical standpoint is a bullish pattern. However, what makes it bullish, once again, is going to be the break. Okay, it's always the break that triggers a pattern. But yeah, this is all I have for you guys in terms of the shorter time frames on Bitcoin. Now, if you guys really like this analysis, if you like the historic price action that I brought up, if you like my criteria on when I'm going to be looking for a turn in the market, you can let me know by smashing that like button. And hey, if you're someone who has not already subscribed to the channel and you want to keep up with the latest mango juice, go ahead and hit the subscribe, and I will see you in the next update. With this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, guys.